And before I hand it over to Kathy from Heartland Credit Restoration to take us through Credit 101, I'm going to read our funder's disclaimer into the recording. The contents of this webinar were developed under Grant H421F240198 from the U.S. Department of Education, the Department. The department does not mandate or prescribe practices, models, or other activities described or discussed in this document. The contents of this webinar may contain examples of, adaptations of, and links to resources created and maintained by another public or private organization. The department does not control or guarantee the accuracy, relevance, timeliness, or completeness of this outside information. The content of this webinar does not necessarily represent the policy of the department. This publication is not intended to represent the views or policy or be an endorsement of any views expressed or materials provided by any federal agency. EDGAR 75.620. And now I'm pleased to turn it over to Kathy from Heartland Credit Restoration to take us through Credit 101. It's all yours, Kathy.
Thank you so much for that introduction. So my name is Kathy. I have been working for Heartland Credit Restoration for about 13 years. We strictly work on personal credit, but we like to start there even with the small business because the first couple of years of owning your business, it's very hard to get business credit, and they do look at personal credit first. So you want to make sure your personal credit is on track. There are some companies you can pay to get a better business rating right away, but it's thousands of dollars, and it's just easier if you and it helps you in the long run too if your personal credit's good anyway. You're going to need to back it with that. So that's what I'm here to explain, some do's and don'ts, some myths that are out there about credit. So let's start with just this. What is a credit score? It's basically a number that defines how likely you are to pay back a loan or a debt. Obviously a bank doesn't want to give you money if they don't know how well you are at paying it back. Some people have lots of money, but they're still really bad at making their payments. And some people are really good at making their payments and don't quite have the money and need to juggle things around. So that's what a credit score is. It's your history. It's like your transcript in school. Each account is kind of like an A, B, C, or D, and they average it together, and that's how you get your GPA or your credit score. There's lots of different credit scoring models out there, but on an average, scores are going to be anywhere from 350 to 850. That's the common range. So next. And like I mentioned, this is kind of how they grade it. An 800 score is very, very hard to get. So people get kind of upset thinking they're not a straight A student and they're not doing well. 800 scores, really, you have to have credit open for quite some time and some history. So anything over that 740, 750, you are doing amazing. So that's just kind of how we grade it. If you're below the 500, 520 mark, there's some work to be done. You're not going to get a lot of loans and things like that. Typically, if you hit the 300 and 400s, it typically tells a lender that you have something currently past due, like your car loan's 30 days late, or maybe a credit card's 60 days late. That's where those D's and F's come in. But on an average, people out there right now are averaging pretty much in that C plus B minus area. The mid sixes, early sevens are about where people are now in this day and age, just because of the economy, and you have to use credit cards and things like that. So we'll get in a little bit more about how those credit cards that you might be using are impacting that score. Next. So a negative on your credit report can mean multiple things. The higher rates you're going to get on not only your business loans, your personal loans, car loans, mortgages, but it also has an impact on car insurance. People don't realize that not just your driving record, but your credit score determines what rates they're going to give you. So, your credit card interest rates will be higher, and that's thousands and thousands of dollars when you're talking over 30, 40, 50-year time frame, that interest rate, the difference is huge. So you always want to try to get the highest score you possibly can when you know you're going to get some kind of a loan, because that's going to get you those best rates and allow you to save so much more money that you can allocate towards something else. Next. Okay. Also, like this mentions, your employment. Now, a lot of places, it used to just be financial institutions, banks, and people doing bookkeeping and things like that. They would check credit scores, but more and more companies are checking your credit rating before they determine whether you are a good fit for their position. They do this because obviously they want to see, okay, are you responsible? Are you paying your bills? Are you just trying to go out there and get a whole bunch of cell phones and then never pay and then go to someplace else and do that? That kind of boils down to your personality and your ethics and things like that. So credit score is huge when it comes to that as well. And starting a new business, that's exactly what they're going to want to look at. They're going to say, hey, are you paying things? Are you doing what you say you're going to do with this money? When you're getting grants and things like that, are you using it for what you should be, or are you out there opening up a bunch of things, new car loans here and taking trips here? All of that is on your credit report, how much you're using that credit and what you're opening and doing. So that's why it is so important to keep that credit report clean. And that is what is going to determine whether you're going to get the loan or not, is based on your score. And there are quite a few grant places too. Everyone's different. I don't know, states have grants for small businesses. There's federal grants, there's community grants, lots of different kinds. And they all have different rules. But just by rule of thumb, you can be denied for grants based on your credit score as well. Next. All right, so this is just kind of breaking it down for you a little bit, what the difference is in those interest rates. And they change all the time. We can't keep this updated because home loans and just everything has different constantly through the board. So this is just an example. If you were to buy a home at $20,000 and your score is in that mid 700s, and you get a 5%. If your score is more down in those 500s, you're paying 8%. Over a 30-year loan, that is $142,000 difference that you are going to be paying just because of that credit score. And you don't notice it on a month-to-month basis. But when you look at something like this, like cars, if you're, 8 cars, this was kind of exaggerated, but this is showing you 40 years. So a lot of people do get a new car every 5 years. But if your car loan is at a 7%, or 7% at a 740 versus an 8% at a 580, that's $62,000 over a 40-year span, and so on. So you look at the credit cards and those interest rates, and toys, that's kind of where I figured in like motorcycles and boats and campers and things like that when we were trying to put together this slide. So over 40 years, if you just had a few cards, a couple cars, a home loan, and some recreational things, $293,000 is what the difference is just in interest. So when you look at it that way, what could you do with that $293,000 versus just throwing it away? So very important. The higher the score, the better. Next. All right. This is just talking about the different bureaus. There's 3 main bureaus that report: TransUnion, Experian, and Equifax. These are 3 totally separate companies, and sometimes you'll go in to get a loan or a grant or just anything you're trying to do, and they might only look at one bureau. So people concentrate on that. A lot of people have Credit Karma, which only has 2 bureaus on it. When you are trying to get your credit where it needs to be, you want to look at all 3, because it does cost creditors money to report. So there are smaller companies that might only put your information on one bureau. I'm in Iowa and we have a lot of small towns, and there's small town banks that you get a car loan and they might only put it on TransUnion, but then you want to get a home loan and you want to go to some national bank and they're going to pull all 3. Your TransUnion might be perfect because you have 4 or 5 loans on there and you could be 700 or 800, but your Experian and Equifax might be 500 because you don't have any history on that report at all, because that bank chose to only pay to report to TransUnion. So that's why the scores can be different. And most of the time, I would say 95% of the time, the three scores are different. Medical bills sometimes are only on one bureau. Credit cards, most credit cards and things like that are going to be on all three, but there could be a mistake and one of them's not reporting. So you want to really look at all three. And since they are their own company, say you have a Capital One, and Capital One sends the information to the three bureaus to get updated. Well, since they're three different companies, they have three different processes. TransUnion might process that payment and change your score, in the next 48 hours. Experian might take a couple of weeks before you see that updated payment on your report, and Equifax might take a month or two before you see something that you paid off show up. So that can make a huge difference in those scores. Next. There are a lot of errors on credit reports these days. There's identity theft, there's fraud, places getting hacked, just information in general. Everything starts by a data entry point. So if somebody accidentally transposes two numbers in your social, somebody else's stuff might be on your report. So it's very, very good. There's an annual credit report where you can get a free report each year. Credit Karma is not my favorite place because they don't really give a lot of the information if you're serious about your credit. But any of the monitorings, I encourage people to just keep an eye and look at those things, especially if you're starting a business and you're trying to get your name out there and get credit built up and things like that. I had a young man. It was kind of sad because his scores looked great, but he was trying to get his first time home loan, and we were going through the report together, and he had a $400,000 mortgage on there. And I said, "Aren't you a first time home buyer?" So unfortunately, we had to get that off of there, and it made his scores drop a lot because that was a really good account, paid on time, been open years, but he was not going to get another mortgage with a $400,000 debt already on his credit report. So even if it's good credit, you still do not want it on there because it is going to hurt your credit one way or another. So definitely look at those credit reports. I have monitoring, and because I've done this for so long, I literally go on my bank app and look pretty much every day just to make sure that everything looks good and things are good, and you'll get alerts if something new's open, things like that. So just be aware, because when you do start applying for things, word gets out, and then you see tons of emails and tons of calls from all these places. We want to loan you money. No, come here. We can approve you for this. And you'll just get spam all over the place. And so when that happens, that information sometimes gets messed up and can impact what's on your credit report. So definitely watch that. Keep an eye. If you ever have any questions, we're here for things like that. We do free consultations and we answer questions and things like that. So just make sure if something doesn't look right, it probably isn't, and you want to get that fixed right away. Next. Okay. This I pretty much, there we go. Here we go. So this breaks out how those scores are factored in. And again, some scoring systems might do things a little different. Pay history might only be 30%, amount owed might be 35%, but in general, this is pretty close to what most places are. So the biggest part of your credit score is going to be that pay history, 35%. That just means paying your bills on time. You don't want any late payments in there. When it comes to late payments, here's a little tip. Not that I want you to pay anything late, but the way credit works, say your car payment is due the 5th of every month and you get paid on the 10th of every month. You pay it on the 10th. that institution or that place can charge you a late payment because you technically paid it late, but they will not mark it late on a credit report until it hits 30 days past due. So as long as you're making those payments within that 30 days, it won't have a negative impact on your credit. But a single late payment or a current past due can drop your scores. We've seen, it depends on your credit profile, but we've seen anywhere from 30 to 80 points just from a single late payment. And it does take some time to recuperate from that. The next biggest is the amount owed. So this isn't just everything, loans and mortgages and things like that. This is basically just credit cards. So credit cards are very important. I know there's tons of people that believe in the cash only and have done Dave Ramsey and things like that. But in this day and age, if you don't have some kind of credit in there and show things, they don't like to give you, points for that. So this 30% mark means credit cards. There is some rules to that. It's a 30-30 rule. So as long as you have some open active credit, this category is going to be good. However, you do want to keep your balance to limit under 30%. So each month having it open, you'll get more of that history. You'll have another month added to your history, that 35% mark, and this orange amount owed category. So you'll get points for having it open, but if it's over 30%, you could lose some points. So to get the maximum points on a credit, you do want to have that under 30% at the time of reporting. So what that means, again, let's go back to a Capital One. If Capital One does their data drop or sends all the information to the credit bureaus, they do that one time a month. So whatever date or whatever your balance is on that date is what gets reported. So let's say they send it over on the 10th. Your payment's due on the 12th. So maybe your card on the 10th is maxed out, but you pay it off on the 12th every month. You just pay it to zero because you don't want that interest. It is going to show maxed out on your credit report because you make the payment after they've already sent it. So the next time they send it next month on the 10th, your balance could be high again. So you can legally call them and ask what day they report. And I always tell our clients, do maybe 3 or 4 days prior to that date just to make sure the payment posts and you're good to go. So if it's zero when they report, it'll show zero on your credit report. And then the day after the report, if you max it out and pay it off again before that next report date, it will never show a balance on there. So that helps your debt to income when people are pulling up your credit report because they don't see a balance on those credit cards, even though you know you're using them. They won't see that, and it helps your credit tremendously because it's under 30%. And just to give you an example of how much impact this 30% is, we've had people who, example, 5 credit cards. Credit looks great, no charge-offs, no collections, no late payments. They just have 5 maxed out credit cards. And we'll say, okay, you have this money, you just got a loan, you want to pay things off, pay those all under 30%. We've seen people go up over 100 points just by paying those credit cards down under that 30%. And then the next thing, the 15%, the next biggest on here is the length of credit. So the longer you have something open, the more impact it has on your score. So again, credit cards are factoring into this one big time because car loans, people have them anywhere from 3 to 7 years usually, and then you pay it off. You might get a new card, but it starts back at day one or 1 month again, and so forth. So even a home loan, most people either refinance or get a new one. Worst case, you do the whole 30-year mortgage. You're at 30 years, you pay it off, and you're back to zero, and you have no credit again. A credit card, they're hoping that you keep open forever. So I know a lot of people get cards and then they'll see, oh, this one has a balance transfer or a better rate, so I'm going to transfer everything over. And then they close that original one and they're starting completely over. So those 800 scores, usually you have to have a few things, 10, 15, 20 years. And the longer you have it, the higher that score is going to go. So credit cards are the way to do it because if you have one and it's permanent, it's going to give you a longer length of history. 10% is new credit. That means opening accounts. Yes, it's good to have open accounts. You don't want to keep opening them every month. If you have too many new credit, that's what they're looking at in this category. How much credit do you have? How recently was it opened? Sometimes people have good scores and a bank might deny them and say, no, you have too much new credit. You've just opened a car loan and two personal loans in the last 30 days. We don't want to give you a loan right now, even if scores are good. That tells them a few things. One, why did you need all those personal loans? What's going on? What's happening? When you're getting a new business, it's a little bit different when it comes to business credit and things like that, because yes, you are going to have to buy office equipment, buy supplies, do all of that. So that's a little bit different category. But in personal, if a bank sees that you keep opening all these new accounts, they're going to panic. Are you not working? Are your checks not enough? Are you struggling to pay your bills? What's happening? Do we want to give you more money that's going to make that even worse to where you can't afford to pay someone? So they do look at new credit, how open it is, and how many you have. And then the last one is types of credit. You don't want to put everything in one category. So sometimes I saw somebody's business the other day, they had like 7 or 8, I think, car loans because they were all trucks for his business. But that's all he had was just those. He didn't have any credit cards, any personal loans, anything like that. A good mixture is what they're looking at here. Do you have a couple of credit cards? Have you had a personal loan that maybe you had for a few months, you paid it off, it's doing good. You've had a car loan, you've been great on all of them. So they are looking at different types of credit. It's not a huge part of your credit score, but it is 10%. That category, they are looking at the types of credit you have. So you want a little bit of a mixture in there. Next. Okay, and this just kind of goes over what I talked about, so I'll recap. That 10% is the number of the accounts that you've recently opened, how many inquiries, I didn't talk about that. If you are planning on getting cars for your business or anything like that, I always do recommend going to like your bank or your credit union or something first and getting approved, because if you go to a dealership, this happens more times than you know. On a daily basis, I see this. And I deal with people with bad credit, so it's really bad. But they put your information into a general system and it shoots out to the first place. If they say no, it goes to the next one. If that says no, it goes to the next one. And it keeps going and keeps going until they have that approval. And then that salesperson will come back and say, hey, I got you an approval. Let's talk about, the rates and the payments. That can put a ton of inquiries on your report. We've seen 100, 200, 300 credit pulls. You're allowed about 5 or 6 credit pulls a year before it hurts your credit in any way, shape, or form. A few more after that, it could be a point or two here or there. But when you're talking hundreds of them, you can lose a lot of credit points. And then that's going to make all those interest rates higher and things like that. So you don't want to just be out there doing a ton of credit. You want to look at a monitoring or talk to someone, kind of know what your credit is ahead of time before you're applying for too many loans. Because obviously if somebody is a 500 score and they're trying to get a car loan and they're bouncing from place to place to place, every time they're doing that, it's making it worse and more impossible for them to get that loan because they have way too many credit pulls and there's no way they're going to get approved with that score. So that's just kind of a recap of what that 10% is. Next. And again, the types of credit is that mixture. Just make sure you have a couple of loans, car loans, personal loans, and then on average, 2 to 4 credit cards is where you need to be. You don't want to have too many credit cards either because they do look at your potential. If you have 4 credit cards and each one has a $10,000 limit, there's a potential you could lose your job tomorrow, God forbid, and then rack up $40,000 in debt that you might not be able to pay back. So they look at what could possibly happen. So you don't want to have too much open-ended on your credit cards either. Next. And then again, this payment history, the importance of a late payment. And I tell people this isn't exact numbers, but think of it like this. You have a car loan or a credit card, and I'm going to give you 5 points this month because you have it open, it's active, and you paid on time. And next month you'll get 5 points, and so forth. And that's how you're building the length of history and just history in general. You get a late payment and you drop back about 30 points. So for the next 6 months, you're just making up for what you lost. And sometimes it's even more depending on the credit situation. But for the next few months, instead of just saying, hey, I just got 5 points, I did a great job again, my scores are going up, you're just trying to recuperate from the amount you already dropped a few months ago. So always pay on time. That's the number one rule in credit. Next. And again, here's the amount owed, just to recap. That is only the 30% is only credit cards. So a car loan, personal loan, mortgage, those, as long as you're paying on time every month, it's like an A+ on your report. But the credit cards, that's a little bit different. If you are at 50%, it's kind of like having a B on there. You know, you're paying on time, you're doing good, but you need to get it under that 30% to make that account an A+. So that's only credit cards. So I tell people, if you have credit cards over the limit or over the 30%, some people get their taxes back and they say, oh, I'm just going to pay off my car loan. That hurts in two ways. One, because when you pay off that car loan, it's going to close that account and you're no longer going to have it open and factoring into your credit score anymore because it's closed now. And two, your credit card's still going to be over the 30%. So instead of paying off a car, you can pay it down so that you still have a payment for a couple of more months while you're building credit, and put all that money on the credit card because that will make the scores go up. A double car payment or a loan payment doesn't do anything. You get the set amount just for paying on time, no matter if it's 1, 2, 3 payments. But a credit card, you will get extra points by getting that under that 30%. Next. And then again, the length of history, how long you've had things open. In big letters, do not close your trade lines. You don't have to use like credit cards and things like that every single month to keep it open. I tell people, you know, go buy a bottle of water at the gas station or something, then go on the app the next day, pay it off, and you can wait 2 or 3 months before having to use it again. But you don't want to close it because then you're going to lose that history and have to start over. So you never want, that's how you're going to get that 5, 10, 15, 20-year trade line. So unless you have a ton of them, like we've seen people maybe have 20 credit cards, then I may recommend closing them, but you would always want to close the ones that are the most recently open because you want the longer ones to stay open as long as possible. Next. Now, this is where it gets really tricky because you're trying to get your business going and you might see some things on your credit report, and the first instinct is to do the right thing. Let's go pay these collections off and get it done and over with, and take responsibility because maybe there was a hardship and things fell apart and you couldn't pay some things. But paying collections off can actually hurt your credit score if it's not done the correct way. The reason this is, the score is based on what's called the date of last activity. Usually that's the last time a payment was made or when they moved it to the charge-off collection, things like that. So say that's on your credit report and your hardship was back in 2021. So now you're doing great, you're back on your feet, you're making money, you want to fix this issue. So you call them up, you make a payment, they'll take your money, but what happens is the balance will go to zero. That date of last activity would change to 2026, and an item can be on your report for 7 years from the date it's paid off. So that gives another 7 years of it saying charge off or collection on your credit report. The scoring system is going to see those words, charge off or collection, and what's going to happen is they're going to see that new date, they're going to think it's brand new, and it can cause your score to drop because you just paid it off. So typically, what you want to do is first ask them, hey, what can I do to get this removed from my credit report? Some companies will want you to pay the full amount. Some companies will still settle for less, and they may agree to delete it. Um, some companies may say, no, it's our right, and we don't want to delete that, but we still need payment. Maybe it's going to cost you a loan. The loan officer might say, hey, you have a $15,000 repo on here. No matter what your score is, with this on here, with that kind of debt being non medical, you need to pay this off before we can get you approved. Sometimes you have to bite the bullet and do it, but there's always ways to dispute things and try to clean up after the fact too. So sometimes you have to do things you don't want to, but a rule of thumb in general, don't just run out and start paying things. If you have some stuff on your credit report, you're unsure, give me a call. I'll look it over for you and kind of walk through some do's and don'ts, because we've had people take all their tax money, or they just got an inheritance and they'll pay everything off and then call after the fact and say, my score just went down 150 points. What's going on? And it's very frustrating, especially after you just spent all that money and now your score is worse than when you started. So that's the downside. As far as medical bills go, a medical bill can't be put on your credit report unless it's over $500. So smaller ones don't even report anymore. What some places do, if you've got multiple like copays, they might add them all together, making it 500 and put it on your credit report. But medical bills, the CARES Act states now that if you pay off a medical collection, whether you pay it in full or you negotiate a settlement, once it's paid off, those do have to come off your credit report. Sometimes it takes them a while and you might need to dispute it, or, call them a few times and get that off there. But legally, it has to come off your credit report once you pay it. So if any questions about collections, feel free to give us a call. Next. All right, so what does good credit mean for you? More purchasing power, whether you're getting a home or a business loan or whatever that may be. Obviously, the lower your rate's going to be, the, say they tell you you can afford a $500 a month payment, and that's in your budget, your debt to income, everything will be good. If the interest rate's less, it could mean, okay, I can get a $10,000 loan and have that $500 a month payment. But if your scores are lower and you have to keep it at 500, they might say, we're only going to qualify you for 7,000 instead of 10,000. So the higher the score, the better purchasing power, because the lower interest rates, the more you're going to get, the better terms, and overall, in general, thousands and thousands of dollars you're going to save in that interest over your lifetime. So that is basically what good credit is going to mean. And here is my information. Feel free to call, text the number on the screen, 319-261-9629. Or email me. We do 100% free consultation and go over the credit report. I tell people I'm like a teacher grading your tests. We're going to go over those accounts. We're going to see if there's things that aren't yours. Maybe something you paid. Maybe you even paid it 2 or 3 years ago and it's still showing a balance on there. So we go over all of that. We do have a credit repair program. Obviously, if there's things on there and it's overwhelming and you say, I don't want to deal with any of this, I want you to dispute, I want you to negotiate, I want you to take care of it, then we'll talk about different programs. But the consultation part is free. You're not locked into anything. That's going to give you some options, some answers, some advice. But again, we can only do that on personal credit. You have to have special licenses to be able to actually dispute or help and do do business. They have different rules on what you can do with the credit bureaus and how that works being a business. But again, it all stems back to your personal credit, and the business credit's going to work about the same way. You're still going to want the same mixture. You're still going to want to pay your bills on time. You're still going to want to have some business credit cards. So it all is the same. We just can't dispute or negotiate business credit. But for the first couple of years, any credit you do, they are going to be looking at your personal credit until that builds up. But to be able to get business credit, I recommend and kind of tell people, look at like Capital One and different places have business credit cards, which you will still have to put your personal information in there. But when they list it as a business one and they get your EIN numbers, it will start to link it and make your credit profile start to build up. So that's kind of where you want to start with things like that. And now I think we're open to the questions.
All right. And we have had a few questions come in. And please keep adding them to the Q&A if you think of others as we're talking. But Kathy, the first one is just, do hard pulls count in the new credit category?
They don't, because it's not new credit is when something is open. But so in that little pie chart we had, inquiries do not show up in there, but they do show up in another area at the end of the credit report. So that's more of just it's kind of its own category. They don't even factor it in the percentages, but so it's not new unless you actually open an account. But they do look at those, and if you've had more than 5 or 6 a year, um, it will start to drop your credit scores for having it pulled too many times.
Thank you. Someone asked if you could explain a little more about adding a trade line.
Yeah, yeah. So adding a trade line, there's a few different ways to do that. So basically, there's secure cards. So say your credit's not high enough, you keep getting denied for credit cards, you can do a secure card. Those are different than prepaid cards. People get that confused a lot. So it's not like going to Walmart or Target, getting one of those cards and loading it up. A secure card, and we do have some on our link on our website too for cards like that if your scores are lower. But basically, the you would put like a deposit, a security deposit. So say you put $200 down. They give you a credit card with a $200 limit. That doesn't mean you just spend the 200 and then recharge it. It means that it is a credit card. They're holding that $200 in like a savings for you. In case you cannot pay it, they're insured. So that's your security deposit. Most of the companies that do those, after a few months, 3 to 6 months or so, most of them will up it to an unsecured card and give you your deposit back. So those are things you need to look for when you're getting a secure card. Do I get my money back? How long is that going to take? And make sure that they report to all three bureaus, because some of them don't. So be very careful. You want those things, because some companies will say, yeah, we need a $500 deposit, but you don't get that back. It's non-refundable. That's processing fees or something like that. You don't want those. So that's one way to develop a new trade line. The second is if your credit's good and you can just go online and get a credit card or go to your bank or credit union and get one, that will add a trade line. And the third way is more of a temporary way, but it does help quickly for people. So, say your scores are low and you have a friend or family member. Let's just say mom. Mom's had a credit card and it's been open for 15 years and the balance looks good and she's never been late. You can go right on apps usually now and say add authorized user. That is not a co-applicant. It does not make you joint on that account. It's still mom's account. You don't get a card unless she specifically asks you to have one. You have nothing to do with it. In fact, if mom says, hey, go buy some groceries, and you call her, my daughter does this sometimes, I just used $100, I'll pay you back on payday for the card payment. They won't even take your payment because it's not your account. But if she's had that account open for the 10 or 20 years, it would show up on your credit report like you've had it for 10 or 20 years. So that's going to open a trade line, and it's going to make your length of history expand a lot. So it was originally meant for like kids going off to college. Parents would get that card and say, hey, in case of emergency or gas or food, you have this. We'll pay the bill. It's ours. Don't worry about it. But this is an emergency thing. But now they allow any friend or family member to do that. But you do have to remember that the bad comes with it as well. So if you don't trust that person and they max it out or they get a late payment, that's going to show up on yours as well. And I say it's a temporary fix because, especially in the mortgage business that we help people with a lot, getting home loans, if that is your only trade line, the only thing you have on your credit report, it might get you into the 700 score, but they may say, we need to see something of your own because they know the authorized user you're not making that payment on. So it still doesn't give your credit worthiness. But to a credit card company, if you get added on there and your scores go up to 700 in the next couple of months, then a credit card company's only looking at that score and they'll say, oh, yeah, we'll get you some good rates and approve you for a car or a loan or a credit card. So it's good to get you started, but you still want to have your own. So that's the three ways. Either your scores are good and you just apply, get approved, secured cards or loans, or an authorized user. Those are the three ways to get a trade line.
Thank you. That's wonderful. Great strategy that I hadn't
Yeah.
heard before, so I'm sure it's new to others also.
Yeah.
Are there specific credit cards you recommend or don't recommend?
Not really. The main thing I just tell people, see what you want. Do you want one that gives you cash back? Do you want one that has frequent flyer miles? Things like that. It depends on what your scores are because like Discover, usually your scores have to be higher. As far as secured cards go, like I said, Open Sky, which is on our website, that's a really good one. They don't even pull your credit as long as you have your $200 deposit and you have some sort of an income, whether it's SSI or a job or whatever it is. As long as you have an income and you're able to put the $200 down, you get approved. And then you just use the card under the 30% mark, get things going. And once you've done that a couple of months, that score is going to start producing and rising and doing good. They are very good at giving the money back in a timely manner too, and moving you from a $200 to a $500 limit. And then you have that for a few months. It might go up to $1,000, and so forth. So they're a very good starter card. But I always say, in my opinion, if you're getting a credit card or a loan, try your local bank or credit union first because they're going to know you. They're going to give you a little bit better deals because you're banking with them. It's easy to just transfer or do an auto pay if you're banking at the credit union and you have a credit card with them. You can put on an auto pay so it transfers so you don't forget and have a late payment anytime. It just makes life much easier because all your financials are kind of right there in a spot. But if that's not an option, um, you know, always Capital One. I've heard some people have issues with them, but overall, they seem to be really good. They're a big, huge company. They approve people. They have a lot of different types of cards. Um, so they're not bad. But I would recommend a regular MasterCard Visa type thing versus a store card. Yes, a store card's good, but say you just got Ashley Furniture or some kind of furniture store, you got a card and you bought a couch. How often are you going to go back in there and buy more furniture to keep that thing active? Because if you don't use it for so long, they'll close it automatically due to inactivity. So, and a lot of store cards, this happened with Walmart a few years ago. Synchrony Bank used to do their credit cards for Walmart. So it would say Synchrony Bank Walmart. Well, when the terms came up again to renew, they didn't renew with Synchrony Bank. They renewed with Capital One. So now it's a Walmart Capital One. So that can interfere too because they just kind of sold it off to a different credit card company. Or store cards can close, go out of business. My boyfriend had a Toys R Us card he had for many, many, many years, and Toys R Us closed, and that messed up his credit tremendously when that closed because he lost all that history. It was gone. Um, so with the bigger companies, MasterCard or Capital One, Credit One, places like that, you're not going to run into that risk because they're the same banks that do the store cards and everything, the funding for them. So.
Thank you. And actually, a question that kind of connects to that one. Someone asked if your company has any ties to Capital One or other lenders.
No, we do work directly with mortgage companies and banks and lenders for car loans, things like that. As far as credit cards, we do have some that we have on our website. There's 4 or 5 different ones on there that we have investigated. We don't have partnerships or anything like that, but we've investigated. They do report to all 3 bureaus. They report once a month because there are some companies that will report every 3 months or every 6 months, things like that. So if it's every 6 months, you're making a payment for 6 months in a row, but you're only getting credit twice a year because they're only telling the credit bureaus those 2 times. Like student loans does that. When you're paying your student loans, they only report every 3 months. So you'd never have a 30-day, a 60-day, and a 90-day in a row. It goes straight to 90 days. If you're late, they wait 3 months and it reports a 90-day and hits you pretty hard. So the ones on our website do report to all 3 bureaus. They're fast acting, so you're not waiting 5-6 months before they start reporting, and they meet the qualifications. But other than that, we have no ties to them or anything like that. We just looked into them and found that they're pretty decent, good cards. As far as the interest rate goes, those fluctuate constantly. I don't know what they are, and it's going to be determined by your credit score too. So.
And there is a question about interest rates. Someone
Mhm.
asked if you could speak on the credit card annual percentage rate APR and what that means.
Okay. So the percentage rate on credit cards are ridiculous. I mean, you can get some down in the decent numbers, but nowadays, if your credit's not good, I've seen interest rates on cards go from 27 to 33%. And so, if you have a 33% um, percentage rate and you have a huge balance on your card, sometimes the minimum payment, maybe on something big, might be $125. Well, your interest rate that month was $130 and you're paying $125. So your balance just went up $5 more because you owed more than in interest than what you were paying. So that interest adds up, and every month they're gonna put interest on there for, they'll look at your balance and how much you owe and when was this cycle, you know, um, when did the cycle start and end on that, the interest rate period, and then they factor that in there, and it's bad right now. So you definitely, if you have lower scores, want to watch out. Avoid interest at all costs. Another trick I tell people, because you don't want to pay that interest, if you have something that is reoccurring, like maybe you pay Netflix every month or something like that, and you already have that set on your debit card to come out anyway, get a credit card and put that on your credit card, and then do an auto pay from your bank to that credit card like the day after. So it's a cycle. You don't have to carry that card around. You're not doing anything different than you would. So if you're paying, a day or two after you use it, you won't be paying much interest at all. But if you put $500 on there and this month you're paying $25 and next month you're paying 25 because that's your minimum, you're never going to get anywhere because the interest rate's going to be more than what you're paying your monthly payment. So avoid it at all costs.
Absolutely. There is a question about, you mentioned the authorized user as one of the
Uh-huh.
strategies for adding trade lines, and someone
Yep.
asked if being removed as an authorized user looks like you've closed an account on your report.
Yes and no. So it will be closed. It won't show up on there anymore. A lot of times it just completely takes it off of the report. So you're not seeing it on there as a closed account anymore. It's just not on there anymore. But yeah, unfortunately, if you gain 100 points by being added to that, you get taken off, you could lose that 100 points. You always want something in there to make up for it. That's why you get your own and have it for a few months. So that way, if you do get taken off, you're not going to see as big of an impact because you have something that's replacing it.
We have a question about dealing with fraudulent opening of credit in your name. And I saw another one about, how to prevent or protect yourself from fraud as
Yes.
well.
Great questions. You can go online to TransUnion, Experian, and Equifax free of charge and do a credit freeze. And that doesn't have any impact whatsoever. I do it there. That's the milder one. And it just means if somebody goes into Target and applies for a Target card, before anything's done, I would get an alert saying an inquiry has been made. You say no, it doesn't go through, you're good. Because I did have somebody get a loan in my name a few months ago, and my bank and everyone was alerting me, and I was like, okay, I didn't have for a new inquiry. I didn't have my credit pulled. I called them and they did tell me your social, your birthday, everything is on here. It's good. Where the funds are being released. And I said, it was not me. So I have a freeze on mine. So if I decide I want to apply for something, you just have to go back on all three of their sites and click unfreeze, have them pull credit, and then put the freeze back on. So that way nothing can go through without you saying, yes, this is me first. If something goes through, like what happened with me, go get a police report. Have a police report on file. The police station will tell you there's nothing we can do. We don't pursue these, unless you have proof or whatnot. It doesn't matter. Just having that police report is great when it comes to if that open account shows up on your credit report, and you try to dispute it, the credit bureaus are going to send it to the creditor, and the creditor is going to say, nope, it was open, and that's it, and it's still on your thing. But if you have a police report, your chances of it getting deleted are much, much higher because they're going to look at it and say, yes, you're serious. We have people all the time who'll say, this isn't mine and this isn't mine. And I'll say, go get a police report. And they'll say, well, it might have been my sister, it might have been this. And they don't want to do that. Credit card companies know that. They know there's so many bad people that'll call them and say, this isn't mine, just hoping that the debt gets removed. That police report helps because then they know you're serious. You took time. There is something stated in a police record that you are legally saying this was not yours, and the chances of them reversing all that and fixing your credit, taking it right off, and you not owing that debt is much, much higher. So I tell people, just go get it, even though they tell you they can't do anything. And I know when I did mine, you can do things right online. So you don't even have to actually go down to the police department. Just Google your local police department, get that, have that number, keep it on file. That way you're protected. You have some kind of proof that this is what's happening. But the credit freeze is probably number one. That way nobody's gonna get, like, these people actually got the loan and they sent the money to them, and then they sent me a bill saying your first payment is this and this, and I was like, no. And that, had I not have caught it and known what to do, if that they didn't pay that first payment, which I doubt they would since they stole my identity, that would give you a 30-day late on your credit report, and that could turn into a collection and fighting it, and it could totally mess up your credit. So a credit freeze is good, but Experian.com, Equifax.com, and TransUnion.com will take care of that. And I got all three of them done in probably less than 15 minutes. So
I was about to say I recently did it also, and yeah, 10 or 15 minutes of your time can make sure that
yeah,
all three are frozen, and it's free to make accounts on all the websites. So
yep,
a little
yep.
legwork can go a long way in the future for sure.
Absolutely. That is so much faster than having to fix things after the fact.
Yes, absolutely, and much less stressful.
Yes.
Someone asked if how can having a consumer attorney help with ID theft?
Um, I honestly, I don't really have an answer. There are people who have the identity issues and it's not being fixed, and they do hire lawyers. We have Fair Credit Act attorneys that work with our company. So if we have the police report and it's, they're not fixing things, that lawyer does help. And sometimes people won't even dispute. They'll just get the lawyer, and the lawyer will call them and say, hey, I'm handling this case. This is fraud. And that might be enough. But I don't know enough to tell you pros and cons with going straight to a lawyer. I mean, I'm sure they have more fees and stuff like that involved. So hopefully you don't have to get that far. But especially if you know who it is or have proof or a paper trail, then I might get a lawyer and maybe go after the person themselves for the fraud. Then I would definitely recommend a lawyer if you know who it is and want to press charges and things like that. Then definitely have a lawyer involved for that.
A few more questions. We're doing good.
Okay.
Someone asked, how do you get personal debt consolidation or personal loan to pay off credit cards?
That's a great idea. We tell people that all the time that are in our program. You just have to have your score high enough to qualify. And a lot of times, you don't want to go to like a debt relief. Let me tell you, like national debt relief and stuff like that, how that works, and why I say don't ever do that option. Because most of those places, if will tell you, hey, we're going to get your rates reduced and we're going to help you make this manageable. We're going to make those payments for you. What they don't tell you is those credit card companies aren't going to settle for less and do that until the account's in a negative status. So say you had 5, 6 credit cards you wanted to add to national debt relief and you were perfect on them, other than struggling to pay them down. You're just paying the minimum and getting nowhere, but your credit score is good because you pay them on time, what you can. They will not make the payments for, you know, usually 120 to 180 days. You'll get a 30-day late, a 60-day late, a 90-day late, and so forth. When it becomes a charge-off collection, then they approach them, get the settlement, and that sort of thing. So we've seen people go from 800 scores down to 400 scores because they just lost all their credit. Everything's closed. Everything they have is now a charge-off collection status. So you do not want to do those because yes, in the long run, they're making those payments for you and you might get it paid off faster. But for me and being in credit, I always say, let's look at a couple things. Maybe if you can just pay minimum on some of these credit cards, get this one under the 30% and bump your score up 40 points. Your local bank or credit union could do a personal loan or a consolidation loan because your credit score is now high enough for that, that now you can use that money to pay it, because the personal loan or consolidation loan is probably going to be about half the interest rate of the other ones, and you're going to have one payment versus all of those. So it is a great idea, but it all depends on your score before they'll get you approved or not. So again, that's something that we strategize and say, where, you're 20 points off from being able to be approved. Where can we find 20 points in the fastest time possible? Put $5 here, or no, if you put $5 here, this one would be 20 points. But if you put the $5 there, it's not going to make much difference. So strategically, you just have to figure out where to get those points. And maybe that would be a situation where you get added as an authorized user, you get that trade line, it's 5 years old, in the next 45 to 60 days, your scores are up 50 points. You can go get that loan and pay those things off. But even if you pay them off, I don't recommend closing them because you don't want to lose that history on them.
Is it better to open 2 credit cards and pay Netflix on one and another recurring monthly bill on the second?
Yes, if you don't have very many open trade lines, 2 cards are good. Um, you know, like I said, 2 to 4 is ideally the mixture you want for a good credit profile. So having 2 is great. And yeah, the Netflix thing, and or the bottle of water or a tank of gas or whatever you do with the other one, as long as you're keeping them under that 30% mark, every month having them open and active is going to get you points. So yeah, think of it like that. If you, have some late payments, we consider a late payment account kind of like a C on your report card, as long as you're, you know, it's not a charge off collection and your balance is low. It's like a C because it has a late payment on there. Charge offs and collections are those D's and F's. So say you have 3 or 4 C's, D's, and F's, but you don't have any A's on your report card. Even if the C's, D's, and F's stayed how they were and you added an A or 2 A's on there, think of it like that, 2 A's onto your report card, your GPA is going to go up because you just added those 2 good things on there. Whether you did anything about the bad stuff or not, you're still going to increase your score by having those open ones. So obviously having 2 is better than 1, but you just don't want to go overboard and have too many of them.
And then once you get them, you have to be careful how you use them.
Yes, exactly.
We have a few business related questions.
Okay.
So someone asked, I have a business card. So if I decide to apply for another business card, will the bank look at my business credit? Also, should I apply for a Dunn's credit score?
Okay, so the Dunn's credit score is the one I talked about where you can pay extra and get it on there. I don't know enough data, enough people that have done that and reported back to me saying whether it helped a lot or not. But yes, when you go to get a second business account, they are going to look at your business one. So if you do have a business profile going, they're going to do it just like a personal one would, but now they're going to not look at your personal because you have a business set up now and you're established. They're going to look at strictly business credit profile. So they'll look at how many accounts you have open and how long, and the same rules apply. But in that situation, it would be just the business stuff that they're looking at when you get to that point.
And then does Net 30 account help you build a business credit?
It does. It's slower, but yes, it would help because it's going to show up as payments. And sometimes when you're getting business loans and things like that too, when you're first starting out and it's a smaller business, they may say, "Hey, show us some of these net 30 things and receipts and that you're paying." So it might not factor in the score as much at that time, but some banks and institutions will just look at how good you are at paying those. If you show them that you have these accounts and you're paying perfectly and all of that, that will help build confidence and show responsibility. Not all of those net 30s are going to put them on the credit report though, but yes, just having them is showing that you were able to pay that in a timely manner.
Right, I think we're getting towards the end of the questions. If you still have questions, you're welcome to put them in the Q&A. But I think for now, the last one is just, if you could focus on one thing to improve someone's credit score or repair damage to a credit score, what would that one top thing be?
The one top thing is credit card balances. More than anything, that is where you get the most points. People come to us and have 5, 6 collections, but maybe they're in a hurry and they're close to getting their home and just need maybe 20 points. Instead of working on those charge off collections, as long as the bank allows them because they're under a certain dollar amount, all the money towards the credit card is going to get you more points. Like one credit card that could be maxed out, getting it under 30% will get you more points than paying off and getting a deletion of a collection usually. So number one thing we look at, especially if you're in a hurry to get those points up as fast as possible and as high as possible, the first thing we look at is your credit card balances.
Utilization rate, right?
Yep. Yep.
One more question just came in. It says, to increase a credit limit, is it wise to pay off a small balance before asking for an increase?
Most of the time, they're going to look at payment history for increases, not whether they want you to have a balance on there, to be honest, because that makes them more money. So you don't necessarily have to pay it off, but you're going to want to make sure that you have had on-time payments and have had the card for a little while before you ask for an increase. And that sometimes can be another quick fix now that we're on that topic. So say your credit limit is 200 and you're sitting at $100 balance, you're at 50% balance to limit ratio, and that's bringing down your score. But if you call them and they approve you to go up to 500 and you only have that 100 on there, you're under that 30% and you didn't have to pay any money. If you don't have any money right now to pay that balance down, sometimes asking for a score increase or a limit increase will actually help your credit score too, just because it makes that balance to limit ratio better for you.
Well, thank you, Kathy, for addressing all those questions. Sometimes we get almost as much out of the questions as the presentation, but you did
Absolutely.
a great job breaking down a complex topic for us and really making sure people understand how to get to that solid place where they're going to be able to build for their business. So
Absolutely, because there's
we
so
appreciate your
many
time.
YouTube things out there
Yeah.
saying,
Oh, of
"Oh, fix
course.
it
Yeah.
150 points in 20 days," and all that.
Hmm.
And just to set the record straight, that is impossible. There is a law called the Fair Credit Act that says any disputes, any cleanup, anything you have, the credit bureaus have that 30 to 35 days to change the report. So if it's changed, you could get very lucky and they might just happen to not have very many and update it. But by law, anything, if you paid off every single one of your credit cards today, your score wouldn't change and it wouldn't increase for probably the next 30 to 35 days. So when they say they can turn it around in 7 days and get you 150 points, that is not true because there's a law and the credit bureaus would get in a lot of trouble if they, you know, changed those things and shouldn't have changed them, didn't give the creditor time to actually say this is true or valid information. So
It's always a
just be
process, right?
careful. It is
Mhm.
a process. Yes. Well,
It looks
thank you
like
so much.
one more question. Oh, no, we just got to thank you for sharing your knowledge in the question box. So
Well, thanks
I
for having
second
me.
that.
And again, if you have any questions or concerns or anything like that, reach out because that is exactly what we're here for, is to help answer those kinds of questions for you.
Wonderful. And for everyone in attendance, the recording and the slides will be available on our website in the next 1 to 2 weeks. Kathy's contact information is on those slides, so you'll be able to pull them off of there. And I would encourage you all to do the survey that's going to pop up when the webinar closes. You'll also get it in an email tomorrow from Zoom. But we really want to know how well we did and what we could do to improve, and be able to celebrate Kathy spending time with us and teaching us so much. So thank you all for your attendance. Thank you, Kathy, for your focus and all this wonderful information. And everybody will see you in July for our next webinar.
All right. Thanks, everyone. Have a great
Thank
day.
you.